Hello everyone and welcome to Green Star Trading with me Tom, aka Mr. 47734, trading out of eToro. It is 6 minutes past 8 Monday morning, the 19th of August 2019. Just a really quick update for you guys at the moment. I just wanted to take a quick look at the futures market for the S&P 500 and also at Bitcoin, because we're actually seeing some interesting price movements in both at the moment. I'll probably do a much more in-depth look at these assets at the end of the week, because we're likely to get some decisive movement this week, I think. But we'll start here with the S&P 500 futures market. We all know the topping pattern I've got going on here with our A, B, C thinking our B's in, and we're now working our way down to the C. This is just a temporary count I put in. It could potentially be much deeper, and the C could be further forward, further back. But I just wanted to have a quick update on the current price data we're seeing, because we're rallying this morning. And I wanted to point out something quite interesting. Well, I think it's quite interesting. Assuming this is our wave 1 of a new impulse wave down, we're waiting to put in the 2. Okay, which it looks like we are on our way up today to do. Maybe today, maybe tomorrow. This is the 4-hour chart, so it could take a couple of days. Let's just zoom in a bit on the 2-hour. Okay, right. Let's just spread the chart out a little bit. Now, the thing I want to point out, a couple of things I want to point out, is this trend line here, which we broke down after we put in what we think is our B wave of our major correction, and we went into our 1, 2, 3, 4, 5 down into our 1 during this big sell-off. You can trace this back and see how this trend goes all the way to the bottom. We came up and we've kissed it a couple of times, and we've been rejected and sold off each time quite aggressively. But if we take a quick look at our Fibonacci levels, where we'd expect to see this retrace to, so if this is our top and this is our bottom, we'd expect to see our 2 somewhere around the 61.8, 65. Now, as you can see, we've come up and we've tested it and we've been rejected. We've come up, tested it, and we've been rejected, and the 61.8 Fibonacci level and the 65 both coincide with this trend line. Okay, and then it also coincides with, you may have noticed, if we just take this off again, I just clicked on the wrong thing, excuse me. Right, so let's just get 2 volume profiles up here. We like to use our fixed range. I like to do this, where we pick out our high, which we know is this candle back here, and we come across to the current price. Okay, like so. And we can see that the highest point of volume is right at these peaks. Here and here, right on the trend line, right on the 61.8 and 65 Fibonacci levels. I mean, since we're working in this time frame and we're not going to be zipping around the chart too much, we can just put on visible range, which literally means that everything you can see on the chart is what the volume is accounting for. And unsurprisingly, obviously, we get the same confirmation. The point of control is right here as well, so we don't really need this now. So let's just take, since we're working in such a small area, take the fixed range off. So if this is our 1, then we're looking for some kind of A, B, C into our 2, and it does seem to be taking pretty solid form as we speak. So this is shaping up to be a nice little bull trap, actually, where we see this rally off of this bottom here. This could be mistaken for an impulse wave, and then people think they're off and running in a free. I mean, we can have a look at accounting that and see if that's possible. But what is quite interesting is you've got, if we do come back up to test this line, you're going to have this wedge pattern. Again, is it a wedge? It's more of a triangle. It's an expanding triangle, isn't it? So are we going to be looking at a count inside of this triangle? Possible with the 2 up here. We've got our point of control here again. We could come up to test these highs. We just got above them before, and then the sellers came in and sold off. So I think we could probably rally up a bit higher, maybe even come up to test this trend. And let's just get our little, what was it? It was a 1. So it's in this 1, 2, 3, 4, 5 into an impulse wave into a 1. So and then we had a rather dodgy 3-4. Oh, because it was just like I've explained before how it was just such a sudden and extreme rip down that you can't really pick out a count. It's not corrective though. I mean, that's the one thing we can say about this. This is impulsive, not corrective. So there would be a count in there somewhere, assuming that this is correct. And like I said, the volume backs it up, and the Fibonacci levels back it up for the moment. So this is what we're sticking with. I mean, I think if I remember, we can see it a little more clearly on the 1 hour. I mean, I guess you'd have to put it here, wouldn't you? Is that an A, B, C, possibly? Deep 1, 2, the 4 doesn't retrace into the 1. That would be legitimate. This is a 1 compared to the 3, compared to the 5. Let's have a quick look at that. So, let's have a quick look. That's our top. 1 from the 2 to our 3. Yep, okay, so the 3 is longer than the 1 because the 1 extended from the 2 would take us to here, whereas we came down to the 1.318 with the 3, came back up to test what would be the equivalent of the 1 from the 2 to put in a 3-4. So yeah, it happened quickly, there's no doubt about that. This was a pretty aggressive sell-off, but there is a count in here. There's an impulsive countdown, so I still feel this is a 1. And then I think the market took a bit of a shock here, and it is now trying to take a hold of itself with forming this expanding pattern to put in our 2. As I've pointed out, you've got the Fibonacci level here right around the yellow zone, the 61.8, 65. We don't have to come back up to here to complete our 2. We could be about to complete here. You don't know. We could even break through to the 67. There it is again. That's 68, 78, 6. I must be a bit dyslexic and not aware of it. I know it runs in my family, so maybe it's just when I'm not thinking in a focused way, I let things slip out. But I keep saying 68. I know it's a 78. I've been saying it for years, and yeah, you just have to forgive me. It's just one of those little things. Right, so for the moment, I'm waiting to see the 2 complete in what is looking like a big A, B, C. But we'll put the C, we'll give the bulls the benefit of a doubt, and we'll put the C up here on this trend line. Maybe push right into the top of the yellow zone to the 65, into this point of control where where we know we've got our volume in this area. And that's where the sellers will likely be waiting to come in. If we push past this level, then the only rule that's in play, if this is still a corrective wave 2, is that the 2 can't retrace to 1. So we could have a full retracement up to here. Anything's possible, but with all the negative news out there at the moment, and trade war problems and all sorts, I'm not sure that the market sentiment is that bullish. I think we are putting in some kind of expanding pattern, as you can see here. I mean, we can dig out the little count here. So let's just change this down. So that's an A, that's a B, that's a C into the A. Let's just change this into a smaller. It's not actually a minute wave. It's an intermediate wave of a primary, but I just like to use certain letters so that I know what I'm looking at. It doesn't matter what kind of labeling you use for where in the wave structure you are, as long as you know where you are. That's all that really matters. And then we've got the same gig here with an A, B, C into our B. And then we could be looking at 3, 3, 5. So maybe we're putting in some kind of 1, 2, 3, 4, 5 up into a 2, we can't see a free wave structure yet. Not clearly if this is the C into the B. So what we'll do is we could be going up to come down to go up again to finish off this 2. But either way, I'm feeling pretty confident with the way this expanding pattern is showing up. This is very, very much a corrective kind of pattern. You know, where you'd expect to see an expanding flat, I guess you could call it. So yeah, we'll keep it here on the trend line. It might be a little, it might not. Like I said, we don't have to get that high. We could get stopped at the yellow zone. We could get stopped before it. We could get stopped at this point of control before we start selling off again. So I know one more exercise to do with this because I really don't want to take too long. Let's just get rid of this Fibonacci level again, and let's check our wavelengths relative to one another. Okay. So let's say we take the bottom of the impulse wave and we take the length of our A. Okay, and then we take the length of our A and we project it from the bottom of our B, and look what our candidates are. Well, you've got the yellow zone again, which is same in this point of control area again. It's around these previous tops. It's around the 60. This is the 61.8 and 65% projection of the A wave from the bottom of the B. So the C could be here. The 78 is here. Around just beyond these previous tops, and then also around this trend line, and then the 100% retracement is over here. So we could go through this trend line, or if we are going to muck about for a while, we could even work our way all the way back up to it, but we could be over here and then get rejected because it intersects here, you see. So it could be a B and a long C. I mean, it's possible that we're shaping up for that now. Or, like I said, all of this gets broken in the short term, price pushes up aggressively, and we come up to putting another top. And then we'd have to be looking at something different if we broke that level. But for the meantime, you know, this adds up for me. We can expect to see somewhere around, in my mind, anywhere between this level and this level. We can expect to find our C putting in our 1, 2 before we start our impulse wave down. If we just leave the 2 on this trend line for the moment, we can then project where our 3 would be. Let's have a look. This is the top of our 1, bottom of the 1, and we project it from here. This is just, I see, I've already got it down here, so it's just 4 and 5. Okay, so I've already projected that at some point, obviously. Okay, that's all there really is at the moment, guys. That's just a quick update about the S&P. Looking, like I said, I'm using the ES1 futures now because I like the fact that we haven't got any gapping in it, and I've got nice solid price data to work with. And I think I'll probably be doing this as we go ahead from now on, as I just prefer the chart. So here we go. I just wanted to point out that I spotted this expanding pattern. As we put in our A into our B into our C into our 2 with this impulse wave down into this 1, 2. We've seen our Fibonacci levels, you know, we've seen our point of control here around these tops. We've seen this previous trend line. There's a lot of confluence here to suggest that this is a corrective pattern, and we're simply waiting to put in a complex wave 2 before we start selling off again. If all of this gets taken out, the volume here doesn't sell off, this trend line gets taken out, the Fibonacci gets taken out, this pattern cannot be lined up with any trend lines, this expanding pattern gets taken out, and then we are off up higher to either find a higher price level in this corrective wave 2, or to cancel out this wave 2 and we're into something else, and I have to reconsider what we're looking at. But for the moment, pretty confident this looks corrective, 1 into a 2. And that's that, really, guys. So next thing I wanted to look at quickly, because we've had some interesting action over the weekend, is Bitcoin. Now, here's the chart. We're very familiar with it all now. Remember last week we still had our potentially bullish count, which was this was a 1 into a 2 into a 3, 4, and then the 4 retraced what would have been the 1, so I took the bullish count off. I remember doing it live as the price was falling into this area here, and I was saying we're right at the point of invalidating this bullish trend, of an impulse wave, and therefore we'd have to take it off the chart, and that's exactly what I did. I took it off the chart. So I rejigged this and relabeled this like I said I would. There are certain patterns which are still completely relevant and totally legit inside of this new account, but what I think we're now looking at is just a big WXY, a big zigzag. I have tried counting this as a WX XZ before. You have to forgive me. WYX. I'm just having a total brain fart. I haven't had enough coffee yet this morning. Let's get my brain working. Yes, that's it. WXYXZ. Yeah, I was right, but sometimes all these letters are numbers. I don't know. So here's our shift pitchfork that we put on. As you can see, it's still holding the price really nicely. You know, top to this pivot here, to this pivot here, to the bottom of the pitchfork here, to the top of the pitchfork here, to the median line here, and what is the 38 Fibonacci retracement of the total wave 1, which is when we were originally looking at the retracement level of what I thought was a C. It is a C but into a W, but it was a C into the C originally before into a new impulse wave. I was saying felt too shallow. The thing we've got to look at here, though, that we've got to be quite focused on, is we've got our point of control again in this visible range around these tops, this top, and this symmetrical triangle pattern that we saw before the price broke down and invalidated what we thought was an impulse wave. And I think since then we've been putting in an impulse wave down to finish off this Y. And I think what we're doing is we're doing a 1, 2, 3. We're putting in our 4 now. Here's the 38 on the pitchfork. Here's the 50. Here's the 61. As long as we don't retrace, let's just get a little horizontal beam on here. If that's our 1, so as long as we don't retrace this red level, we could come up and kiss it, which would be at the 61 of our pitchfork, and then we could turn down. Although it doesn't have to be that deep. Where we are now is perfectly sufficient for a wave forward and an impulse wave down to retrace to before we come down to put in what I think is our Y in our WXY, back down at our yellow zone, our 61, 65 of our wave 1. I'll have to check that's accurate. No, I've moved it, haven't I? Is it here? You know what, there's so much stuff sometimes on the chart, but I can't actually see the wick of the candle, so let's just get that out of the way. It's up here. Yep, which is in line with our... which would be on our pitchfork. We can move it across actually, let's move it across. And then everything would be very neat and tidy, wouldn't it? We've got our bottom of our pitchfork on our 61. We've got the 61.8 retracement of our wave 1. We've got the bottom of our pitchfork, and we've got a nice extension. I've just moved the whole thing again. Gotta be careful. And then we've got a nice extension, if we measure it, of... so our W from our X comes down to 100%. So that's a perfect zigzag. W, X, Z. The length of the W projected from the X, I'm using the actual candles obviously, not the lines here, projected down, comes down to 100% retracement right at 7508 spot 88, which is right in the region of our 61.8 retracement of wave 1, right in the region of our bottom of our pitchfork, and right in the region of a point of control on this visual range at the moment. And the reason for that is obviously because of all this noise here. You see where I put this red box? This is around the primary wave 3-4 of cycle wave 1. So you've got volume to catch it, 100% extension of the wave W to catch it, you've got bottom of the pitchfork to catch it, you've got a 61.8 retracement of wave 1 to catch it. I mean, if we are going 1, 2, 3, 4, 5 down to this region, this could be an absolutely amazing pivot to catch long, to get in aggressively. It could be exceptionally good. I mean, Let's just tidy all this noise up for a minute. Although it looks nice and bright and pretty, it's very distracting to have Elliott wave lines on the chart. I really don't like it. My eyes always get drawn to it, whereas I'd much prefer to be able to see it in my head, see the lines in my head. I'm sure you can as well, where you can see, it's like joining the dots with your eyes. You can see it form in your head, and then it's much more flexible. You can imagine how the wave structures will appear, whereas if there's a huge bright line on the chart, it starts to distract you. Right, it does me. Everyone works differently, of course. Everybody's brain works differently. Some people are more visual than others. So, talking about that, if this was our pivot, and this was our wave 2, with a perfect retracement of the wave 2 of 61.8, right into this territory of resistance, right into the bottom of this downward pitchfork, and la-di-da-di-da, I've mentioned all the confluence, this would be one of the strongest pivots to get into, in my opinion. Because there's just so much sat there waiting for it. There's so many buy algos just waiting for it to jump onto it, and then we could be off and running. So the way I would say at the moment, guys, is that doesn't necessarily, as always, that doesn't necessarily have to happen. You know, this is not predicting the future. This is just looking at probabilities. I'm just pointing out that now that our impulse wave up has been cancelled out and I've taken it off the chart, the alternative, one of the alternatives, is that we are actually coming down to complete what was my original suspicion months ago, which is that this correction wasn't deep enough and we are coming down deeper. And now there's evidence, now that this price pattern has formed, that we can project forward and find a lot of evidence to support that. That would be a very good place to put in our wave to. All we've got to watch in the meantime is if it's 4 here, if this is an impulse wave down, if the price retraces the level of this 1 here, then this can't be an impulse wave down. And there's two options: either we are kicking back up to our highs and we are breaking out into, and this is a 1, 2 of an impulse wave, you see, potentially 1, 2. So instead of that being the 1, 2, this could be the 1, 2, and we're off up in a 3, and we're breaking out of this entire structure, and I've got to recount this to somehow make it end here in order to get an impulse wave out of this. I mean, I can, but it looks corrective. That's the problem. So I that's possible. This could be. Tell you what we'll do. Just in the meantime, man, we'll just label a 1 here and a 2 here and a 3, 4, 5 off up in the distance, because you never know. So we'll keep that as a count for the moment. Put it as an intermediate yellow. So we could be into a 1, 2, and we're off and running in a 3. I don't think we are, because this does not look like a 1, does it? This doesn't look impulsive. This looks corrective. Very sideways and zigzaggy, and more of a corrective structure. But it's possible. This could be a 1, 2, 3, and we're off and running out of all of this. This could be simply coming back up to test these tops to continue a corrective pattern, which could be the WXYXZ we were talking about. That's also possible. Or we're going to put in our 4 of this impulse wave down into our 2 here. We're going to go 1, 2, 3, 4, and a big 5, which is normal in crypto to have those big rallies and those big sell-offs, to put in our pivot that we spoke about, and then we'd be off and running. So if the price does start falling, don't fret. It could be the best thing. It really could, because this would be much more of a confident pivot than anything back here that we've looked at. There would be so much more to support a pivot on this line, in this region, than there is anywhere back here. So I would be not only adding to positions on eToro, I would be buying more for myself personally, for my own personal stash, if we come back down to here. I'm happy with what I'm holding so far and what I've built up, especially since December, but yeah, that would be an excellent opportunity, I think. So that's it really, guys. We'll leave it there. So that's something to look at for yourselves for the week. Load up the chart, look at this level here. This is the well, there's a lot of ones there. What's that? 11.5 as spot 70, as spot 74, which is the bottom of this one. If this gets broken through and invalidated, then this can't be an impulse wave down and we're into something else. I'll keep an eye on it as well, and if this gets invalidated, I'll come back and recount this as to some kind of corrective wave, or try and pick out some kind of corrective wave for a 2 before we go up to a 3, maybe possible. So yeah, there you go, guys. We've looked at the Just starting to get a little red candle. Could that be a 1-2 start of a 3-4 into the C? Possibly. Either way, we've got our structures to look at for the week now. We've got the S&P 500. We spoke about the levels and the confluence here. We've got to suggest that this is still a corrective wave too. And we've got our Bitcoin as well, which we're watching. So anyway, thanks for joining me on this technical analysis. A very, a brief technical analysis of Bitcoin and S&P futures. Please, if you haven't seen it already, go and watch my previous video called Why So Bearish, which looks at not Elliott wave counts, but it looks at a simple technical analysis of the history of the stock market and the other factors, all from a technical perspective. I could give you fundamental lists longer than my arms about why I think the market should turn down, but just purely from a technical perspective, highlighting what I think is going on. Please go and watch it. Thumbs up, likes, comments, subscribe if you haven't already, same as usual. So thanks guys, take care, enjoy the week ahead, and I'll be back with you in a week's time. All the best.